Vodacom's bid for a 30% stake in Maziv has cleared another hurdle after getting the green light from the Competition Appeal Court. Vodacom and Remgro say the court approved the transaction, subject to revised conditions. Under the new terms, Vodacom will contribute 4.9 billion rand in fibre assets, pay just over 6 billion rand in cash for new shares, and invest another 2.5 billion rand to reach the 30% stake. The agreement caps any future increase at 34.95%. Executives say the approval is a significant milestone in expanding fibre access. The deal now awaits ICASA's final approval. Nedbank's disposing of its stake in Ecobank, Transnational Incorporated. The group selling its 21.2% holding for around 1.8 billion rand. It follows an announcement earlier this month that the stake had been classified as a non-current asset held for sale. CEO Jason Quinn says the move is part of a strategy reset on the rest of the continent, with a sharper focus on the SADC and East Africa regions in businesses the bank owns and controls. The transaction is expected to close in the fourth quarter, pending regulatory approvals. Stadio's flagged higher half-year profit. The private higher education provider expects its headline earnings per share to increase by up to 32%. No reason has been provided for that forecast, but more detail will be provided when Stadio opens its books later this month. Bytes has launched a share buyback program with £25 million. The software security, cloud and AI services specialist says its strong balance sheet and prevailing share price support the move. The buyback will be carried out on the London Stock Exchange and is expected to wrap up in the second half of this year. South Africa is a step closer to deciding on possible steel tariffs, a move aimed at shielding the local industry from surging imports. The International Trade and Administration Commission will publish preliminary findings from its review next week. That review, launched in March on a ministerial directive, comes as the sector battles an onslaught of low-cost Chinese steel, weak demand and crippling energy and logistics constraints. ITAC's review covers over 600 tariff codes and will assess whether current duties offer enough protection or if stronger safeguards are needed. The motor industry is calling for a tariff hike to curb imports. It's pressing the government to raise the duty on imported new cars and bakkies from 25% to 30%. It also wants changes to the Automotive Production and Development Program so manufacturers can use incentive payments to cut their own prices. Industry leaders warn that without urgent action, the sector's long-term survival is at risk. Imported vehicles account for 64% of local new vehicle sales, with the fastest growth coming from China.